Hello guys, good evening. So let's get started. Let's see what we can cover for today. So yesterday we stopped at we're discussing about we're discussing about the bid and the ask price, right? So we're discussing about the bid and the ask price, and I was saying that. So let me go back to my trading view. So yesterday I was saying that this first line here, which is this red line here, is our bid price, while the blue line down is our ask price. And whenever you're buying a currency or you're going to buy, let's say you're placing a trade for a buy, right? So the first where now this is where the price is, you can see, right? So you can see this is where the price is, right? You can see it from this candlestick. So this is where the price is, right? So this simply means that when you place a trade, right? When you place a trade for a buy, now your buy will not start exactly where the market is. Your buy will start from the bid price, which is here. This is where your buy position or your buy order will start from here, right? So now automatically you are going to see yourself in loss because if you are buying here, that means if you are placing your trade and your trade is your buy position is starting from here, and this is where the price is still below your entire, that means you still be in loss, right? So before you can be in profit, until this where the price is, right, which is this ask price, come and pass this bid price or come and pass this your entry where you entered for before you start seeing yourself in profits, right? So same thing with that for the sell. So if you were selling, right, price will be around this point, right? This if you were selling, price will be around this point, which is will be around the bid price, right? So when you place a trade for a sell, your sell will start from here. So automatically you see yourself in loss before you can see yourself in profits or in profit until this your bid price, which is this red line, come and pass this your initial entry, right, for a sell. That is when you see yourself in profit, right? And I said again that the the distance between your bid price, right, and your ask price, right, distance between these 2 points is what is known as spread. So let me just zoom that more. So the distance between this your bid price, let me write that too. So here it's called the bid price, right? This red line is called the bid price. While here it's called the ask price. So, right? So the distance between the ask price or the difference between the ask price and the bid price and the ask price. So the difference between the bid price and the ask price is called spread, right? So the distance between the bid price and the ask price is called spread. Now, what is spread, right? What is spread? So let me put that here, spread. Now, spread, it's is the amount of money. I'm just putting it in a very simple way, guys. It is the amount of money your broker, which I explain what a broker is, charges you for every single trade you place, right? So if you are buying or you are selling, your broker is charging you, right? So the distance between your ask and the bid price is called spread. What is spread? Spread is the amount of money your broker charges you for every single trade that you place, right? For every trade you are placing, your broker is charging you, right? So brokers mostly don't charge you for depositing and they'll not also charge you for withdrawing. So if you want to deposit your money to your broker, right, they are not going to charge you. Charges are zero. If you're also going to withdraw after you have made profit, or if you want to withdraw your money, they're not going to charge you as well. So they only charge you when you place a trade, right? Only unless you place a trade, they will not charge. So the moment you place a trade, right, the distance now between the ask and the bid, that's why you always see yourself in loss, right? You always see yourself in loss. So the distance between the ask and the bid price is what we call spread. right? And spread is the amount of money your broker charges you for every trade you place, or every single trade you place, right? So I just wanted to do a quick recap of this. Now, the next thing we're moving on to is what we call the lot size, right? We're moving on to what we call the lot size. Now, in Forex, what we trade in lots, right? We trade in lots. So we don't just, the way you have, let's say, um, let's say you have $100 account, right? So let's give an example. Let's say you have $100 account, right? So let me put account balance there. Account balance. So guys, let's say we have $100 account, right? So we have $100 account. Now, when you want to place your trade, right? When you want to place your trade, you won't just place this $100. Okay, let's say, and you want to risk, right? Let's say you want to risk $10, right? Inside this 100,000, so you want to risk $10, right? So you are risk $10, right? You want to risk $10. Now, you will not just type this $10 as what you are risking, right? Because this is not how we trade. The way we trade in Forex is we trade using lots, right? We trade using lots. So this is what we call lot or lots, anyhow you want to call it. So we trade using lots, right? So let me go back now. So Forex is traded in lots, right? And lots, these lots are divided into three, right? These lots are divided into three. So now we're talking about lot sizes, right? You can put this as lot sizes, lot size. Right? So you can put this as what we call lot size. Now, as I said, in Forex, Forex is traded in lots or lot sizes, right? It's traded in lot sizes. Now, lot sizes are divided into three, right? The lot sizes are divided into three. One is called the uh, micro lots. The second one is called the mini lots, and the third one is called the standard lot, right? So these lot sizes are divided into three: the mini lots, the micro lots, the mini lots, and the standard lots, right? So they are divided into three, which is these three: the mini lots, the micro lots, the mini lots, and the standard lot sizes. So these are three sizes that lots are divided. So when we're trading, we're either trading in micro lots, or we're trading in mini lots, or we are trading in standard lots, right? So this is how we trade, right? So you don't just carry your $10 or $20 and go and put as your lot size. No, we trade it in lots, right? So this is how Forex is traded. It's traded in lots, and lot sizes are divided into three: the mini lots, the micro lot, the mini lot, and the standard lot. Now, example of mini lots, right? So let's go back to this place. Then we said, okay, standard lot size is 100,000 units of the base currency. Other lot sizes include mini lot, which is 10,000 units, and micro lot, which is 1,000 units. Now, examples of mini lots, right? So let me type that there. An examples of of micro lots, right? So example of micro lots. This is the examples we have for a micro lot. We have something like 0.01, right? 0.02, 0.03, 0.04, 0.05, 0.06, 0.07, 0.08, 0.09, right? So this is an example of mini lot. And for every lot sizes, right? For every lot size. So mini lot is you saying you are okay, let's go back to now for a mini lot size, right? Sorry, for a micro lot size, it's saying that you have a 1,000 units, right? 1,000 units of the base currency. So you can see Forex is traded in lots, and the standard lot size is 10,000 units of the base currency. So for each lot sizes, which is for each lot sizes here, right? For the micro lot, we have up to 1,000 units of the base currency. I've talked about base currency already in the previous video, so you should want that to understand what is base currency, right? Base currency is the first currency by your left hand side, while the right currency pair is your quote currency. So this currency pair, it means we are trading, or it has I also talked about leverage, right? I talked about leverage yesterday. So you should be able to understand this in regards to leverage, right? So I say with a little amount of money, you can be able to access a large buying or trading power, right? I explained that in the video already. So now for a lot, right? For a micro lot, it has, so you can see here, the standard lot size is 100,000 units of the base currency, right? So you can be able to trade up to 10,000, sorry, 1,000. If you are trading micro lots, right? That it means that you can trade up to 1,000 units of the base currency. So let's give an example. If you were trading, um, if you were trading the euro versus the US dollar, right? If you were trading the euro versus the US dollar, right? And the euro is our base currency, while the US dollar is our quote currency. As I said, the first currency by your left hand side is called the base currency, while the second currency by your right hand side is called the quote currency. So when you're trading mini lots, right, it means that you are having a buying power of up to 1,000 units of the base currency, right? 1,000 units of the base currency. While if you are trading mini lots, it simply means you are having a trading power of up to $10,000 or 10,000 units. So 10,000 units, right, of the base currency, right? 10,000. So why for the standard lot, it simply means that we are having a trading power of up to 1,000 units. For instance, I'm just using trading power. I'm going to still explain what this. So have it in mind that for a mini lot is we are having the capacity to be able to buy or trade up to 1,000 units of the base currency. While for a mini lot, you are having the capacity to be able to trade 10,000 units of the base currency. While for the standard lot, you are able to trade 100,000 units of the base currency. So now this is an example of a mini lot. Why for a micro lot, sorry. So why for a mini lot? So mini lot. So this is an example of a mini lot, right? So for a mini lot, you are going to see something like this, right? So for a mini lot, instead of 1.01, you will see something like 1.01, 1.02, right? 1.03, sorry, 1.13, so 1.14, 1.15, 1.16, 1.17, 1.18, 1.19, continuously like this, right? So you can see 0.20, right? 0.21, right? Sorry, 0. So these are example up to, right, guys, up to 0.99, right? Up to 0.99. So this is an example of the mini lot. So for the micro lot, this is where we stop. Stop at 0.9. So the moment you place a trade now with 0.10, it means that you are not trading in mini lots, right? So the mini lot reaches up to 0.99, right? 0.9. So an example of the standard lot, right? So an example of the standard lot is where you have something. So an example of the standard load. Now, instead of 0.01, what you'll be having is something like this, right? Can say 1.0, right? So let me just delete all of this. So you like 1.0 to, can say 1.0, 1.01, 1. Like you can do something like this, right? Here can be 2. So 2.0, 3.0, right? Even 50, right? Or 5.0, so 9.0. So these are examples of standard lot sizes, right? This is an example of standard loss standard loss. Now let's go back to our micro lot. Now for a micro lot, right? So just have this in mind now, right? I have this in mind. This is an example of a micro lot. This is an example of a mini lot. These are examples of standard lot and so forth and so forth. So for the micro lot, you are able to, it has up to 1,000 units. You can able to trade, right, 1,000 units of the base currency. For the mini lot, you can be able to trade 10,000 units of the base currency. While for a standard, you can be able to trade up to 1,000 units of the base currency. So this is what this is divided into. Now, I want to move on. I'll still come back here and explain this much better, right? So the next thing we have here is what we call the pips, right? PIPS or PIP, right? So what we're talking about now is called pips or pip, whichever one, pips or pip. How many pips do you make? How many one? I made 2 pips, 1 pips. So let's just add S there, right? So now we're talking about pips, right? I'll still come back to this lot sizes again because I want to make the two of them together. Now we're talking about pips. PIP, which is pip, means percentage in points, right? You can see it here, percentage in point. This is what pip is. Now, a pip is the smallest unit of price movement in the Forex market. It is the smallest unit of price movement in the Forex market. This is what pip is, right? The smallest unit of price movement in the Forex market, right? So, in most currency, it is equal to 0.01, meaning if USD moves from 1.100 to 1.1, it has moved 1 pip, right? So what it's trying to say here is that if you were trading euro, so let's go back to our chart, right? So what we are trading here, if you see it by the left hand side, you can see it's euro USD, right? So let's give an example, right? How are we going to be able to calculate? Because now in trading or in Forex, how we really make money is in pips, right? The way we make money is in pips, right? So that's how we make money in the Forex market. We make money in pips. So let's give an example now for the euro versus the US dollar, right? So let's say the exchange rate of the euro versus the US dollar, so let me, euro versus the US dollar, right? And then, right, what we add here is moves, meaning if euro versus US dollar moves from 1.00 to 1.0, it has moved 1 pip. So if the exchange rate is about 1.000, right? So if it's about 1.000, which is 40 here, right? So per pip movement, right? So if it's from it, so the let's say the current exchange is 1.000. So if it moves, if the exchange increase to, so let's put increases to 1.000, right? So 1, it means that the euro versus the US dollar have moved 1 pip up, right? It has moved 1 pip. So if it moves 2, like it means it has moved 2 pips, right? If it moves 5, it has moved 5 pips. I don't know if you understand. If it moves 10, it means that it has moved 10 pips, right? I hope this is clear. So now, so I hope you understand. So if it moves 1, meaning that it has moved 1 pip, it moves 2, meaning that it moved 2 pips. So the combination of within these lot sizes, because I said in Forex, we make money using what we call pips, right? But in Forex, what we trade is we trade using lot sizes. Now, for if you have, let's say, and let's give an example. If we move, how much are we going to make if we are trading, if euro versus US dollar moves 10 pips? Or how much, depending on, if let's say we have a 10 pips here, how much is worth 10 pips? Because I said pips is our money, right? In trading, pips is really the money. This is how we calculate our money in pips, right? So if you are making money, you're losing it in pips, right? So let's say you have 10 pips. Now, how much is worth of 10 pips? That is the question. How much is worth of 10 pips? So this is where the question comes in. Now, if you are trading a micro lot, which is 0.01, per pip movement, right? Per pip movement of a micro lot. So if you are trading micro lot, right? If you are trading micro lot, right? So per pip movement of a micro lot, let me just take this up here. So per pip movement, right, guys? Per pip movement of a micro lot, you are either making or losing 10 cents per pip movement, right, of a 0.01 or of a mini lot, of a micro lot, you are making or losing 10 cents. So if you have a micro lot of of 0.01, right? Per pip movement of this currency or the currency pair thing, per pip movement. So per pip movement, let me just type that in small letter. Per pip movement. So the way I gave an example here, right? So I gave an example here. I said this let's say the current exchange rate is 1.000. So if the exchange rate increase to 0.001, right, 1.0001, it means that we have moved up or move up 1 pip, right? It means we have moved up 1 pip. So let me put that here. It means we have moved up 1 pip. So if it drops to, so we have moved up 1 pip, right? So we have moved up 1 pip. So if it increases again to 2 here, this one changes to 2, it means that we have moved up 2 pips, right? So the thing, what we want to calculate is how much are we going to make if this goes to 10 pips, right? So because what we're talking about now is 10 pips. So how much is worth of 10 pips? So if you say, yes, I made 10 pips in the market, how much is it? Now, it's before you can say how much 10 pips is, we have to know which lot sizes you use. Is it the micro lot, the mini lot, or the standard lots? When we know which lot size you use, then we can able to determine the amount of money you made in 10 pips. So, and I said, for a micro lot, right, per pip movement, right, you are going to be making or losing. So if it's going up or down, so just per pip movement, you are going to be making or losing 10 cents, right? 10 cents or 10, I don't know what is the smallest this thing in euro. I don't know their smallest currency, right? So, but you understand what I mean. I'm using dollar because I don't really know for the other currency. I'll be able to calculate it, right? So, just for instance, we Nigerians now, we have Kobo, right? We have Kobo aside from Naira. So, if you have, let's say, 2 naira, 1 naira, if you go down less than 1 naira, you have something like Kobo, 99 Kobo, 80 Kobo, 50 Kobo, something like that. So, this is what like cents is also in their own currency, right? So I don't know for the euro anyways. So per pip movement, right? Because we are trading a micro lot and a micro lot of a 0.01 per pip movement, we are either making or losing 10 cents. So per pip movement is equals to 10. So I'll put minus or plus 10 cents. I hope you understand this, right? Per pip movement of a micro lot, which is 0.01, per pip movement, you are either making or losing 10 cents. So it's either you are losing, which is minus 10 cents, or you are making plus 10 cents for a pip movement. So if we are calculating for 10 pips to know how much we make in 10 pips, the simple thing you are going to do is you are going to say, since what per pip movement, which is one, so per pip movement is equal to 10 cents, right? So it will be this 10 cents. So 10 cents can be written as like this, right? 10 cents can be written as this, right? So per pip movement, which is equal to 10 cents, right? Per pip movement, which is equal to 10 cents. So if we are moving 10 pips, meaning that it's 10 cents times 10 pips. times 10 pip will determine how much we are now making, right? If you are using a micro lot, right? If you are using a micro lot, so per pip movement, you are either making or losing 10 cents, right? You are either making or losing 10 cents. So how are we going to calculate if you are calculating for 10 pips? So if you have 10 pips, say how much is worth of 10 pips, right? Before you can calculate how much is worth of 10 pips, we have to know the lot size you use. So if you're using a micro lot of 0.01, per pip movement is 10, you're either making or losing 10 cents, right? You're either making or losing 10 cents. So if you times your 0.10 cent times 10 pips, what you are going to get is equal to $1, right? What you are going to get is $1 because 10 pips, 10 cents in 10 places is equivalent to $1, right? It's equivalent to $1 because if I have 10 cents, 10 cents, 10 cents, 10 cents up to 10 places, it means that it's $1 because 100 cents makes $1, right? Hundreds, what I mean by 100 cents is if you have 0 point, which is 10 cents, right? 20 cents. So you should understand. Let's say we have 10 cents, 20 cents, 30 cents, 40 cents, 50, or let's say we have 10 cents, another 10 cents, another 10 cents, another 10 cents, up to 10 places. If you add all these cents together, it will be equivalent to $1. Now let me give an example in naira. Right? Let me give an if you have how many kobo makes 1 naira is 100 kobo, right? Because 1 kobo, 2 kobo, 3 kobo, 50 kobo, 60 kobo, 70 kobo, 80 kobo, but you cannot have 100 kobo, right? You cannot have 100 kobo. So that 100 kobo, it means 1 naira, right? Just like if you have 1 naira, 2 naira, 3 naira, 4 naira, 5 naira, 6 naira, 7 naira, 8 naira, 9 naira, 10 naira, 11 naira, 12 naira, 13, 14, 15, 99 naira, right? You have 99 naira. The next one, you cannot say 100. So if you're switching to the, okay, let's give an example. So you have 99 naira, 100 naira, 900 naira, 999 naira. The next one is 1,000, right? So you cannot say 100, how will you even pronounce it? One, because you're only calling the 1,000. So if there's a way you can pronounce 100, zero and call naira without calling 1,000. Yes, that's it. So you cannot say 100 cents here, right? That because 100 cents is equivalent to $1. Right? Just the same way you cannot say 100 kobo because 100 kobo is 1 naira. Right? I hope this is clear. Right? So if you are moving 10 pips on a micro lot of 0.01, per pip movement is 10 cents, right? Per pip movement, if you are moving 1 pip, you're either making or losing 10 cents, right? So if you are calculating for 10 pips, which is 10 cents times that 10 pips, you're going to get your amount, the amount of money you're either making or losing. So which is $1, right? So this is an example of a micro lot. So if let's say let's say we're trading with a micro lot of 0.02, right? We're trading with a micro lot of 0.02. Now, if we are trading a micro lot of 0.02, we have it in mind that per pip movement, right, for 1 pip of a 1 pip of a micro lot is 10 cents, right? It's 10 cents. So if we are not trading with a micro lot of 0.02, our per pip movement will no longer be 1 cent again. It will no longer be 10 cents. What it will be here now is 20 cents. I hope this is clear. What will be here now is 20 cents because per pip movement, right, of a 0.01 micro lot is 10 cents. But if you are using a micro lot of 0.02, per pip movement will now be 20 cents. So you are either making or losing 20 cents. And you are trying to calculate for a 10 pips, right? If you are calculating for a 10 pips, you are going to say your 20 cents times the 10 pips. What you are going to get here is $2. I hope this is clear. I hope this is clear, guys. Same thing if you're trading a micro lot, right? If you're trading a micro lot of, let's say 0.05, right? 0.05. So 0.05. Now our per pip movement will not be 20 cents again, right? Because now our lot size or our micro lot size have increased, right, to 0.05. So we are using a micro lot of 0.05. So per pip movement will no longer be 20 cents, but what it will be here, right? Per pip movement here will now be equals to 50 cents, because if you're using 0.01, you're moving 10 cents, 10 cents, 10 cents, 10 cents. Like that's if you are saying 0.01 plus 0.01 plus 0.02, sorry, plus 0.01, that's 3 bar, plus 0.01, that's 4, plus 0.01, that's 5, that's 0.05. So each of these 0.01, they are making 10 cents. If you calculate it in 5 places, what you are making is 50 cents. Because, okay, now let me give an, if you have, so 0.01, 0.01, 0.01, 0.01, 0.01, right? And I said, per pip movement here of a micro lot of 0.01, you're making 10 cents. So if you calculate 10 cents plus 10 cents, which is 20 cents, plus 10 cents, which is 30 cents, plus 10 cents, which is 40 cents, plus 10 cents, which is 50 cents, right? So that means you're making 50 cents. But now, what if you calculate this 1 plus 1, 2 plus 1, 3 plus 1, 4 plus 1, 5, meaning that this one will be equals to 0.05, right? If you calculate this one, that you will be getting 0.05. So this 0.05, which is our micro lot, per pip movement will now be equal to, that's plus or minus 50 cents, because 10 cents here, 10 cents, 20 plus 10, 30 plus 10 cents, 40 plus 10 cents, that's 50 cents of, so 50 cents, right? That means you're using a 0.05 to make 50 cents per pip movement, which is here. So now here will also be 50 cents, right? So now here will not be $2, because 0.50 cents times 10 pips, because you're moving 10 pips. So if you calculate 50 cents plus 50 cents, which is $1, 50 cents plus 50 cents, which is $2, 50 cents plus 50 cents, which is $3, 50 cents plus 50 cents, which is $4, 50 cents plus 50 cents, which is in 10 places, you're going to get $5. You're going to get $5. So I hope this, please, what do you understand this? I want to just move. I will have less than 7 minutes. So the next one we're going to talk about is the mini lot, right? So the next one we're going to talk about is the mini lot. So the next one we're going to talk about is the mini lot. Now, for a mini lot, per pip movement, right? So let's start with 0.01. Per pip movement of the mini lot, right? Per pip movement, you are either making, because this is our mini lot of 1.01, right? So per pip movement, you are either making 1 or you are losing $1. Per pip movement of a mini lot, right? Per pip movement of a mini lot, you are either making or losing $1, right? So plus or minus $1, right? So if you are moving 10 pips, which what's what you are calculating, if you are moving 10 pips, right? So since per pip movement is $1 and you are moving 10 pips, right? So that is $1 times 10. So what you are going to get is 10 pips, right? What you are going to get is 10 pips. I hope this is clear, because per pip movement is $1. So times 10 pips, you're going to get $10. So if we are now using, let's say, a mini lot of 0.20, right? Our per pip movement will no longer be this thing. Our pip movement will no longer be $1, right? Because our lots, mini lots have increased, right? Our mini lots have increased. So what you'll be making here, right? Because now we're using what you'll be making here per pip movement, you'll be making or losing $2, right? You'll be making or losing $2. So since we're making or losing $2, 2 times 10 pips, which will give us $20, right? So per pip movement. So if you move per pip movement here, you're either making or losing 10. So if you now move 10 pips, you are now making $20. You can do this for the 1.2, 1.1, 0.12, and so on and so forth. So the next one we're talking about, sorry, the next one will be talking, because I want us to really catch up fast, just have less than 4 minutes. So the next one will be talking about is the standard lot, right? The next one we're talking about is the standard lot. Now, sorry. So the next one I'm talking about is the standard lot. So let me type that here. Standard lot. Right. So for a standard lot, right, this is an example of a standard 1.0, right? So here will no longer be this here will now be 1 or 1.0. It can either be 1 or 1.0. Now, per pip movement, right? Per pip movement of a standard lot, we're either making or losing $10. So if, for instance, here our U over 0 is 1.000, right? If it increases to 1.0001, meaning that we have moved 1 pip. 1 pip on a standard lot, it means we're making or losing $10, right? We're making or losing $10 per pip movement. So if here increases to, right? If here increases to 1.0002, right? So that means we have moved 2 pips here, right? We have moved 2 pips. And 2 pips here, it means on a standard lot, it means that we're either making or losing $20. I hope this is clear. We're either making or losing $20. So since here we're using for a per pip movement one, so here will now be $10. So 10 times 10, right? For a 10 pip we are going to be making or losing $100 for a 10 pip movement. So if this thing goes up 10 pips, you are making $100. If it goes down 10 pips, means you are losing $100 for a standard lot. Please, you can try this with by your own self, right? Just watch the video, try again and again. You will understand. So the next thing we'll talk about, we just have like 3 more minutes to go. Right. So the next thing we're talking about is trading platforms. Right. So I just want to be very quick on this. Now, we have 3 trading platforms. These are the only 3 platforms you need as a Forex trader. Number 1 is the broker. I think I already talked about broker, but let me just be very quick about it now. Broker is like a bank. This is where you're going to deposit your money. You're also going to withdraw your money.
You said card. You don't send the card. You can't send to someone.
It's not around. It's
not allowed.
It's not around. It's not around.
Okay, this is not around. Okay. You do POS. This is not around.
I do, but I don't have cash.
Okay.
So what we call here is a broker. Now, what a broker do is where you are able to deposit your money or withdraw your money, right? This is what a broker is, right? So a broker allows you to so these are 3 platforms you need. One is called the broker. The broker is where you are going to deposit your money or withdraw your money, right? So these are the people, or these are the entity that gives you the access to the financial market. As us retail traders, we are retail traders. Our money, like $100,000, $10,000 doesn't really move the market, right? There are people who trade with millions and billions of dollars. Those are the people that really move the market. Us with our 1,000 that don't really make any significant move in the market, right? So this broker is where that is an entity that allows us to be able to have access to the financial market. So this is the broker that will give us access to be able to deposit money and withdraw as well, right? So the next platform is TradingView. TradingView, this is what this platform we are now, like this is TradingView, right? So TradingView is where it's a platform where you are going to be using to analyze your charts, right? So we're analyzing your charts. It's just mainly for analysis, right? This is what you're using TradingView for, just analyzing your charts. While the third one is called the MetaTrader. Now, the MetaTrader is where you're going to be placing your trade, either for a buy or for a sell, right? So the broker is where you're going to deposit your money. TradingView, you analyze your charts. MetaTrader, you are going to place your trades on. I'm going to do a video covering how to use all these trade platforms, from the broker to the TradingView and to the MetaTrader. I'm going to drop a video on that by tomorrow, right? I'll drop a video on how to use these 3 platforms: the broker, the TradingView, and the MetaTrader 5, right? The MetaTrader 5. So I'm going to do a video covering these separate platforms, right? So this is where we're going to be stopping from today. Please, if you have any question, you can ask me, right? Or just drop it in the group, or for my YouTube people, you can drop it in the comment section as well, right? Well, if you really don't get to see that much, you can see what the video over and over again. You'll be able to understand all this. So that's where we're stopping up for today. So this is the part 10, right? So this is the part 10 of this classes. So let me just go to my YouTube channel very quick, because I have less than 1 minute. So this is the part 10 of this YouTube channel, of this class, right? This is the part 10. So before you watch this part 10, make sure you have watched the part 1, part 2. Okay, this is part 11. Sorry, this is part 11. So before you watch this part 11, make sure you have watched part 1, part 2, up to part 10, right? You can see all the videos are here, right? You can watch it over and over again, you're able to understand. So this way we're stopping from today. So with that being said, guys, I'll see you in the next